Hey, Amaludians, I welcome you guys to another episode of our top-down market analysis. As you all know, we are top-down market analysts, and in today's video, I'm going to break down and explain in details all the A plus setups that we are watching out for on all the lists I have in front of me or on my watch list right now, so that we can all learn together and see how we can grow and make money before this week market close for the week. Now, in today's video, the first pair I'm going to analyze and break down from the top down market analysis is pound against US dollar. Now, looking at the overall time frame of the daily time frame, you realize that for some weeks ago, the price action was what has been in a bearish market direction, right? It has been trending down for a very long time, right? And our rule says that when the market is trending down, your number one rule you must make for yourself as a professional price action trader is to not trade against the trend. Trade with the rulers of the market. You just have to figure out who's ruling the market, right? Now, the price action was trending down, creating a swing major high, swing major lower low, lower high, then lower low. At some point in time, the price action experienced some temporary defeat, whereby this key level zone was holding the price from going down, from selling, from breaking this particular support level down, right? Now, remember, the overall direction of the market is still bearish, right? Whereby we also have another important key level zone here. And if you extend this rectangle tool to see the historical data, you see that this zone here is a valid zone, whereby we have multiple touches at a key level zone, whereby we have first rejection here, first reaction around this zone here, the second reaction here, reaction here, reaction here, we have multiple price reactions around that zone. Now look at this support as well. If we extend the rectangle tool so that you'll be able to see the historical data, you see price reacted there, reacted there, reacted there. So last week we said that there is probability for price action to respect this zone and buy to this key level zone. Now look at this zone here. Then the price action on Monday, there was a gap from this place to this place. So the price came back on Tuesday to come and fill up the gap. Then yesterday, after price filled this gap on Tuesday, then yesterday, which was Wednesday, then the price action feed it, then price bought throughout yesterday. Now look at it now. The current price action now is showing that this price action is about to change the direction from bearish market to bullish market, right? From bearish market to bullish market. Right now, the current structure is still bearish because this lower high is still protected. But another thing that we are using to validate our sentiment is that price is about to form a reversal chart pattern that represents bullish reversal chart pattern. We have inverse head and shoulder. We have shoulder here. Then this particular zone is about to serve as our second shoulder here, right? We have our second shoulder around this zone. So there's tendency for price to come down and mitigate the second shoulder and buy. So our sentiment on British pound against USD is going to be bullish for now, because as a result of this inverse head and shoulder. And if you scale down to 4 hours time frame, let's look at the structure on 4 hours time frame. Presently, the structure on 4 hours time frame is bullish at the moment. If you look at the structure here, we have high, swing major, lower low, lower high, then price now from higher low, then price from a new higher high, but invalidating this lower high here. So the structure on the 4 hours time frame is bullish, right? And if you look at the long-term downtrend line, was invalidated yesterday, was invalidated yesterday. If you extend it down, you realize that it has been taken out, and that is a sign that what the price action is back to bullish. Now, what we're anticipating is for, since we already had a trend line breakout yesterday, what we're expecting is price to come and retest this our value key level zone. So we're expecting the price action to come and retest this zone here so that we can take buy opportunity. Simple as ABC. There's nothing to complicate around this zone anymore. So we want the price action to come and what mitigate this zone so that we can take buy opportunity this week. Now let's look at the next pair on our watch list, which is USD CHF. Let's look at what is happening on the daily time frame. At some point in time, the price action was bullish, right? As at this zone here, the price action was bullish, whereby we had higher high, higher low, higher high, higher low, then higher high. And the rule says if you are trend market, that shows that the last higher low must be protected. Price must not trade below it. And if you look at what happened this week, price invalidated it, right? Presently, price has invalidated this zone here, right? This higher low. And if you look at the momentum of the daily bearish candlesticks that invalidated this higher low here is healthy, high momentum. And as a result of this, we have to consider this current price action bearish. And if you look at this zone here, we have our second shoulder here, whereby we have shoulder, head, and then shoulder here. So let's look at what is happening on the on the 4 hours time frame as well. And if you look at the structure on 4 hours time frame, we have high, low, lower high, then we have lower low. Price already invalidated the last higher low during this bullish market condition here. You understand? Price already invalidated it. So if we are going to use 4-hour price action to determine our sentiment, you can see that the price action is already retesting this resistance. And look at the price reaction at this resistance zone. Multiple weeks rejection. And if it 4-hour bullish candles break this, then this place is going to be our next target. This resistance zone is going to be the next target to push a price action down. And then we already experienced trend line breakout around this zone here, right? So there's tendency for price to react around this resistance and then sell, or price should retest this key level zone here, then sell down. So those are the two areas that we're anticipating on USD CHF. So let's look at what is happening on Euro USD. On the daily time frame of Euro USD, we are also having something similar to the previous price action on British pound against USD. We have our inverse head and shoulder here that represent the presence of of buyers. We have second shoulder here, so we're expecting price to mitigate the second shoulder here so that we can have a prosperous and a sweet bullish price action. So let's look at what is happening on the 4 hours time frame. On 4 hours time frame, the structure is also bullish, whereby we have swing major high, lower low, lower high. So instead of price action to create a new lower low, price formed higher low, then invalidated this lower high here, then to give us information of new higher high. Then we're expecting higher low here so that we can take buy opportunity on Euro USD. And if you look at the long-term downtrend line, it has also been invalidated as well, right? Price invalidated it, price broke it here, retested the trend line then bought yesterday. So we're expecting price to come and retest this zone so that we can take buy opportunity. So the next pair on my watch list right now is Euro card as well. Now looking at the structure excuse me. Now looking at the structure on Euro card as well, the structure is still bearish, whereby this place serves as the last lower high, right? the last lower high, whereby we're having high, swing major low, lower high, lower low, then we're having kind of like lower high here. So right now, but as a result of that, we are still having the formation of what? Inverse head and shoulder. And this inverse head and shoulder represent the presence of buyers in the market. Now what we're expecting right now is for price action to mitigate this zone here so that we can take buy opportunity. And mind you, the structure of 4 hours time frame is bullish. Higher high, higher low, higher high, higher low, higher high. So that's time for price to come and give us a new higher low so that we can take buy opportunity. These are very simple. So now let me tell you something. The further we analyze this and price is approaching our point of interest, that doesn't mean we are going to trade. If price did not talk to us that it is time for us to execute our decision, our position, we are not going to do anything. Remember, losses are part of this game. You can take 5 losses, 10 losses in a row. The most important thing is your position sizing, proper risk management, and long-term mindset that you must lose in this game. There's nothing you can do about it. Losses are inevitable. The moment you realize that losses are part of this game, that is when you start making money in this market. It is normal to lose. It is normal to experience losing streaks in this market, which is normal. Don't get upset when things are not working, when you are losing back to back. Relax. That's the best time for you to reduce your risk, to build confidence back until the market condition is going to favor or work in alignment with your system, so that you can start making money back in the market. Please don't forget to click on the like button, subscribe, so that you can get notification when next we upload another exclusive video tutorial like this. See you next time.